Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning and good weekend. Yes, this is Friday the 16th of March already, 2018, 9:15 a.m. Central Daylight Time. Interesting morning. We start off with a small rally in the stock indices, a break in the metal markets, as you can see, getting down to some important areas there. Talk that Mr. McMaster may be gone out of the White House, even shakeups with maybe Mr. Kelly. I mean, you know, the rumor mills just run 100 miles an hour. You can see the dollar is up again against a host of the foreign currencies. The yen still getting that bid, even though Mr. Abe's wife is possibly going to be called to testify about a land deal and did she interfere, do something on a friend's behest. They're after people, so we'll see what goes on there. In the grain market, you still have the wheat underselling pressure now. Corn extending that break that it had, while the bean market staying strong. And again, beans are staying strong because the meal sector of Argentina still very, very dry going into the weekend. A lot of concern, and what's that going to mean elsewhere? In the bonds and the notes, we are seeing a reversal of sorts. And if you take a look, you went up, made the highest high. You're down almost a full point in the bond market. This should not be upsetting to you. And you're going to say, what's Ira talking about? What is March 21st? The Fed. And they're going to raise interest rates unless they surprise the market by a quarter point. You know, one of these times they may surprise you with a half a point and just get more of them done, but that's probably not going to be the case. The market's pricing in a quarter point hike. With a quarter point hike, it's a little hard to stay long in those markets, so I would assume the pros are taking some money off the table. Now, as we look at today's data, it's good. University of Michigan Consumer Index came out at 102. They expected it at 99. That's strong. 122.8 for the current conditions. That's better than the final Feb of 114.9. You slipped in the expectations. Okay, but I can live with that. The reality is where we're at going forward. Just take a look at everything that's going on. Larry Kudlow in, Gary Cohn out. You can expect that. Federal Reserve U.S. production and capacity utilization up 1.1%. They expected it only up 0.4%. The U.S. capacity by itself was up 78.1 to 77.7. Production revised from January to down 0.3, was prior down only 0.1, and about where it was in January for the capacity utilization. When we look at the Philly Business Index, you can see that they came out at 22.3. So these numbers are good. We're still seeing that all the regions are firing up as they should. The National Homeowners Index, 70. They expected 71. That's all right. Housing starts and permits down 7% to 1,236. They expected a lot less than that. That's a negative. And the permits were down 5.71 from an expected 5.75. So we're seeing the housing feeling a bit of the pressure. That should not be a surprise to everybody, and you'll say why. Well, we're just getting into the spring season. That's number one. Interest rates have been coming up. Number two, housing prices, number three, have soared. So buying that first house is getting more difficult, and there just aren't as many of them out there, by the way. The manufacturing shipments, during January were off 1% from the prior month. Inventories were up nearly 1%. That's not a pretty picture. The European Union's stats office reported that consumer prices were just 1.1% higher in February than a year earlier, and that's lower than the rate of inflation that was 1.2%. In other words, in Europe, they're still having problems. They're relating it, I read the story with that, to energy still. And, you know, we did see energy go up and now it's coming back down. They're much more sensitive the way that they run their numbers than we are with ours. I want to remind you, yesterday I held an interesting live webinar, and I'm going to start doing these on a fairly regular basis now. And as I do them, and I'd like to do 1 to 2 every month, I teach what I teach in my charting course. If you haven't done yourself a favor and you like technical analysis, go look at it. We really tell you the whole thing before you lay out a penny on our website. You can do it at www.iraepstein.com under the word education. You can click up here if you're watching me on YouTube. It'll take you right there as well. So go there, take a look. You know, this may change you. And folks, we're talking very little money, very little. You get the charting software, the recommendations, I think 6 hours of videos. Got quite a bit to work with. I'm Ira Epstein. You have a good day, and I will talk to you all come Monday.